On April 29th, a $130 billion investment firm halted all withdrawals. $22.5 billion in real estate locked away. Cyprus, the country, did this in 2013. Argentina in 2001. Here's the full story and how to protect yourself.
Last week, a billionaire named Barry Sternlicht locked the doors on $22 billion of regular Americans' money. Most of those Americans are retirees, doctors, and small business owners, and people who put their savings through a financial advisor. They invested in the Starwood Real Estate Fund, 600 apartment buildings spread across Texas, Florida, and the Sun Belt, because they were told they could get their money out whenever they wanted. They were told it was as safe as real estate gets. On April 29th, Sternlicht sent a letter saying nobody gets their money out anymore. Not next month, not next quarter. Not until, quote, market conditions improve. There is no date attached to that promise. The cash they put in is still there. The buildings are still there. They just can't reach any of it. The technical word for this is gating. In plain English, the bank just locked the door and you can see your money through the window. Most of the press is treating this as one fund's problem. It is not one fund's problem. The same thing, the exact same thing with the exact same mechanism is now happening to a much bigger pile of American retirement money. $160 billion in something called private credit, which is just a fancy term for loans your retirement account makes to companies that can't borrow from a normal bank. 3 of the most senior bankers in the world have warned on the record that what they're seeing right now looks like the early stage of the 2008 financial crisis. By the end of this video, you'll understand exactly what got Starwood's investors locked in, why this hits your home value if you live anywhere in the Sun Belt, and how to check whether you're already holding one of these funds, and what the 3 most senior credit market voices in the world said this week that almost nobody is reporting. Now the details. Sternlicht's fund is called Starwood Real Estate Income Trust, SREIT for short. $22.4 billion, 598 properties, 94% occupied. 71% of those buildings are apartment complexes, mostly in Texas and Florida. The buildings themselves are fine. People live in them. They pay rent. The problem is not the apartments. The problem is that 2 million investors want their money out at the same time. $850 million in withdrawal requests were sitting on Sternlicht's desk before he locked the doors. To pay those people out, he would have to sell apartment buildings. To sell apartment buildings right now, in markets where rents are softening and foreclosure filings are climbing, he would have to take a discount. The discount would lower the value of the buildings he keeps, which would hurt the investors who didn't ask for their money back. So he stopped letting anyone out. He also cut the income payment to existing investors by 25%. Now here is what almost nobody is covering. Sternlicht's fund is not the second one to do this. He's the last one still stuck. Blackstone runs a real estate fund called BREIT that froze redemptions back in 2022. They cleared their backlog by March 2024. The $81 billion non-traded real estate sector got most of it done. The roughly $1 billion in remaining requests across the entire sector, practically all of it, is Starwood. Sternlicht is the one fund manager who couldn't dig out. Why? Because his portfolio is concentrated in Texas and Florida, the same markets where the housing market is bleeding the hardest right now. Adam Q1 2026 foreclosure data shows the Sun Belt is the worst region in the country. Florida real estate-owned filings doubled in 1 quarter. Sternlicht built his portfolio for the boom market that ran from 2018 to 2021. He's now trying to sell into the bust phase of the same cycle. That's the visible problem. Now the bigger one. While the press was looking at real estate, the same investor pulling out behavior jumped to a different market: private credit. This is where pension funds and retail accounts lend money directly to companies. The market is $1.5 trillion now. Forecast to hit $3 trillion by 2028. 5 of the biggest private credit funds in America just reported their Q1 2026 numbers.
Hey everyone, real quick. There's going to be a real estate downturn and you should be ready for it. You need to learn the cycles. You need to learn how to buy and sell real estate during a bear market and go crush it. 4 courses I put together for $49. It's an insane deal. The link is down below. Check it out. It's going to save you a lot of time and money. And what it's really going to do is blow your mind to all the possibilities of how to make money in the near term with this real estate downturn. Now let's get back to the video.
Blackstone's private credit fund, called BCRED, $82 billion. 7.9% of investors asked for their money back. Record for the fund. Blackstone had to inject $400 million of its own money. Blue Owl Credit Income Corp., $36 billion. Investors asked for 21.9% of the fund back in a single quarter, quadrupled from the prior quarter. Blue Owl Technology Income Corp., almost half the fund requested. Blue Owl capped redemptions. BlackRock's HPS Corporate Lending Fund activated its gate after $1.2 billion in withdrawal requests. Morgan Stanley's North Haven Private Income Fund restricted redemptions. 5 funds, $160 billion combined, all hit by the largest withdrawal requests in their histories in the same quarter. 2 of them locked the doors the way Starwood did. Now, here is what 3 of the most senior bankers in the world said about this. Bank of England Governor Andrew Bailey, testifying to the House of Lords in October, quote, "The big question is whether these cases are idiosyncratic or the canary in the coal mine." Mohammed El-Arian asked publicly whether this was a, quote, canary in the coal mine moment, similar to August 2007. August 2007 is when a French bank called BNP Paribas froze redemptions. That freeze was the first visible event of the 2008 financial crisis. El-Arian said the pattern looks the same. Jamie Dimon, CEO of JP Morgan Chase, on a separate but related issue. When you see one cockroach, there are probably more. He was telling investors to expect more frauds to surface. 2 weeks later, U.S. prosecutors opened an investigation into a group of telecom companies. After BlackRock's private credit arm disclosed it had lent hundreds of millions of dollars against receivables that appear to be fake. 3 named on-the-record officials. 3 different ways of saying the same thing. Something is wrong in the parts of the financial system that don't trade publicly. The redemption surge is the symptom. The fraud cases are the symptom. The Starwood Gate is the symptom. The Bank of England, the most respected macroeconomist alive, and the CEO of the largest American bank are all using the same word. Canary or cockroach or warning. Reading the same situation, the same way. Now the part that hits you. If you own a home in Texas, Florida, Arizona, Nevada, Georgia, North Carolina, South Carolina, or Tennessee, Starwood owns apartment buildings in your region, 63,000 units. He's going to have to sell some of them to eventually open the gate back up. When he sells at a discount, and he will, appraisers comping single-family homes near those apartment complexes pull those sales into their comps. The number on your home is going to be repriced by transactions Sternlicht has no incentive to make easy on the local market. If you live near a major metro on that list, your home equity is on a clock you didn't set. If you have any brokerage account, Schwab, Fidelity, Vanguard, Edward Jones, LPL, Merrill, anywhere, pull your statement this week. Look for any holding with the words Real Estate Income Trust or Private Credit Fund. If you have a stock ticker, a 5-letter code, you can sell anytime the market is open. If you don't have a ticker, you can only redeem during quarterly windows, and only if the fund hasn't locked the doors yet. The names showing up on retirement accounts right now include Bright, Shriek, Becred, Otik, and a dozen others sold to retail investors as income alternatives. If you find one, open the most recent quarterly filing. Find the redemption activity. If pending requests are running above the fund's allowed cap, you're holding a gate candidate before the letter arrives. The window between when you notice the requests filling up and the day the fund locks the doors is the only window you have. After the lock, you have 2 choices. Sit on illiquid shares for an unknown number of years, or sell them at a 30% discount to a vulture fund called Mackenzie or Saba that buys distress from desperate sellers. And the third thing, which is harder. If Dimon, El-Arian, and Bailey are right that this is the early stage of a wider credit problem, the financial products you might assume are safest could be the ones holding the most exposure. Annuities issued by life insurance companies. State pension funds reaching for yield. The trillion-dollar private credit market is now embedded in middle-class American savings vehicles. That embedding happened during the past decade when interest rates were near zero and pension managers were desperate for yield. Sternlicht left one number out of his April 29th letter. The amount of property he'd need to sell to pay off the people standing at his door, at the prices he says the property is worth. He has the number. He didn't share it. Watch the next quarterly filing. The disposition number against the redemption queue tells you whether the gate opens in a year or in 5. And while you're watching Starwood, watch Blue Owl, BCRED, and the HPS fund. The next fund to lock its doors will not be a real estate fund. 3 of the smartest credit market voices in the world warned you about it in plain English. The press buried their warnings. Economic Ninja is out.